everybody. Welcome to Hashing It Out. I'm Jordan Mack. I'm a senior software engineer at the Nervos Foundation, and today it's my honor to bring on three of our longest community members here. The first is JMitch, who is what did you bill yourself as? You billed yourself as a blue-collar solo capitalist. Welcome to the show, and could you tell us what that means to you?
Yeah, for sure. I didn't come up with solo capitalist. I heard that from someone a couple of years back. That's what he identified himself as, since he wasn't working for any venture capital firms. And I'm a blue collar guy. I work with my hands for a living. I'm a natural gas technician. But when I'm around the dinner table and people ask me how work's going, I talk about investments instead. So blue collar solo capitalist.
All right. Well, welcome to the show.
Thank you.
Next on is Dunki from the DeFi Rebels. And I want to say there's a minor mistake. We called him Duncan in all of our materials. It's Dunki.
That was my fault.
Sorry about that.
That was actually my fault. I had the typo. How are you guys?
Well, welcome to the show.
Thank you.
Last but not least, of course, Six Fig, who's been covering Nervos for quite some time now. He's a trader and a crypto content creator. Six Fig, welcome back. This is your second time, right?
Yeah, it's second or third time, somewhere in there. I can remember like a year or two ago, we did some YouTube, Twitter Spaces stuff, and it ended up being hosted on my own YouTube channel, and then I got somehow kicked off the feed. But yeah, it's about my second or third go around. So thank you for having me back, and I'm excited for your show today.
Yeah, that was a while ago. That was when we were using Twitter Spaces exclusively, and we had so many technical problems that we eventually migrated to YouTube. Yeah, I think that was for a Thanksgiving weekend or something. So that was a little while ago. All right. So anyway, let's get into it. So the topic of discussion today, we're just going to do it. This is kind of like a throwback episode back to the time when we used to cover a lot of industry news and market sentiment. So that's what we're going to be talking about today. But before we get started, of course, this is a live show, so there are three things I have to mention. Number one, we're not going to be talking about the price. We'll be talking about general market sentiment, but not any price-specific things. And nothing on the show is, of course, any financial advice. We're also not going to be talking about anything about future exchanges or anything that could be used to, basically game the system, because of course exchanges is confidential information. If somebody is telling you that they know that something's going to be on another exchange, they're probably not really telling you the truth, because that is highly confidential. I don't know. Nobody on my team knows. We can't tell you. And of course, last but not least, every opinion expressed on the show today is of the individuals, not of the Nervos Foundation itself. So today we're broadcasting live on YouTube and Twitter. But to be in the chat room, you have to actually be on YouTube. So it seems like most people want to use Twitter, but we encourage you to use YouTube if you want to participate in that chat. And of course, we're going to be doing Q&A at the very end if we have time. So you're welcome to go into the YouTube chat at any point in time and just go ahead and voice your question, and we'll try to catch it if we can. Okay, so the first thing, just really quickly, guys, I'm going to ask all three of you a very basic question in 30 seconds or less, just to get us into the conversation. Give me a short answer. What do you think? Is crypto in a bear market? I know it sounds like a dumb question, but what do you think? JMitch, you're up first.
Yeah, I would say no.
No, you don't. You don't think it's in a bear market?
I believe we're coming out of an investor recession, and we are in the early stages of entering a bull market, but it's not going to be the same that we saw before. It's going to be more consolidated in specific areas. It's not going to be in everything goes up. You're going to have to put in more time and effort to find those winners.
Interesting. Okay. Next up, Dunki, what do you think? Are we in a bear market?
Yes, definitely in a bear market.
Okay. And Six, your opinion?
Yeah, I kind of, I'm kind of along the lines like, I think maybe we are just possibly gearing to emerge out of the bear market. And I look at some long-term indicators, like especially for Bitcoin, like the 2-year moving average close is one of the things. And when things get really bad, we see price move below that average. And within the last couple of weeks, we've seen the price kind of move above that average. So I'm kind of like bearish, and like we're climbing out of the hole.
Right. Okay, so we'll probably have to cover, of course, a bunch of the reasons why we each have our various opinions. But before we jump into that, I want to state there are two things, important pieces of information that I caught just the other day. Number one, there has been a 91% plunge in VC investment into crypto at this point. 91% drop. So it is a massive, massive lack of new money coming into the new projects at this point in time. It seems like AI has really stolen the thunder at this very moment. And right now, I believe the largest Bitcoin convention is going on or has gone on very shortly. The attendance is down by about 50% at this point from where it was before, and that's pretty typical of a crypto winter. These types of things that all the events pretty much end up this way. But that doesn't answer the question on are we about to come out of it, which it sounds like everybody's a little bit saying that could be the case. So let's get into first the first major thing of regulation, which has been a major thing in the United States lately. I mean, there was a video that came out pretty recently by Brad Sherman who attacked crypto pretty much directly. The exact quote is, "Crypto bros make money literally by making money, and they've made over $1 trillion. They'll accuse the U.S. government of making money out of thin air. Maybe we do, but we're the U.S. government." So, what do you guys think on that? Why don't you, Six, could you give us your opinions first?
Yeah, that sounds like some ivory tower talk to me. And Brad Sherman is really doing what he does best, and it's trying to scapegoat the industry, I think, really to help um embolden like the traditional financial systems, things like that. I think it's just a scapegoat scare tactic, and that's really it. But it's funny that he mentions how the crypto industry is pressing the government on the fact that they're just printing money out of thin air, and he kind of goes ahead and admits that's the case. So
Yeah.
I don't know.
All right. What do you think about it, Dunki?
Well, in general, the U.S. government printing money versus crypto bros printing money, they're just upset that they're using U.S. dollars. So if the industry starts moving out of the United States as a whole, we're going to start to see stable coins that are not U.S. dollar denominated, and it's going to completely remove any control that they have over stable coins and profiting and what crypto bros do with their money. So they can't just keep printing money and then blame everybody else when they're trying to make new avenues viable. So a whole new industry could be turning into, the newest sector of the stock market. And right now, they just don't seem interested in the United States. So pushing those things overseas and removing the U.S. dollar from the entire economy is probably not far away if they keep moving in the same direction they're going.
Right. Yeah. What do you think, JMitch?
Well, first off, he didn't say crypto women, just bros. So strike one, sexist, right? So there's that. I listened to the whole talk, and just when he was saying, governments print money out of thin air, crypto bros will print money out of thin air. I mean, even just that simple statement, the coins are, it's value, and value has to flow into the crypto ecosystem through the legacy system of Rails. The government literally does just print out the money. So there was a lot of holes in what he said, but at Six, I think you hit it on the head. This is just what this guy does. He's not a threat. It's just Elizabeth Warren to me is more of a threat than he is. I really don't pay this guy much attention. We can just move on past it. He's just spitting nonsense.
For the most part. I mean, like the one thing that I see is a huge amount of hypocrisy in the statement, of course, just saying that we can do this because we're the U.S. government. Why is that necessarily any different? You're still, like you said, JMitch, it's just value, right? This is all just accounting systems to track value. The major difference, I think, is that with a cryptocurrency, for example, everybody is in consensus and agreement about how the rules work. When the U.S. government done, there's almost no transparency at all. We don't know what it's being spent on, and we have very little say about how it's being spent. It's basically two sides just arguing at each other, and the taxpayer being on the being responsible for the bill whenever one of them screws something up. So there's a huge difference there, and for him to make this kind of statements is, I'm not sure if he's out of touch or he's just genuine. Does he actually genuinely believe that? It's really hard for me to tell. But let's move on to the next one on that topic, which was Joe Biden. He had a tweet about ending loopholes, which he put out. There was a graphic. It said tax loopholes that help wealthy crypto investors, $18 billion. And then he slams the Republicans saying they want to kill food safety inspections. But let's ignore the side about the Republicans, because that's not really what's important. What do you? I'm sure you guys saw the graphic. What do you guys think? Dunki, you want to take it first?
Yeah, I mean, it's unfortunate that crypto industries become segregated along political party lines, first and foremost. But as far as what he said, he's using it to try to score points with his party and punch down on crypto. At the end of the day, he's probably not wrong. I mean, wash trading rules in the stock market have been illegal for a long time. If crypto is going to flourish in the United States, centralized exchanges would probably need to implement the same type of rules. So all in all, I don't think it's a bad sentiment. I think he's just trying to use it as ammunition in the wrong context for the greater conversation.
Right. Yeah. JMitch, any thoughts on that?
I think you hit the nail right on the head, Dunki. I don't have much more to add to that. I think that was right on.
Okay. All right. Six, how about you?
Yeah, I mean, when you think about, what Biden said, or that graphic, tax loopholes that help the wealthy crypto investors, 18 billion, you got to wonder, like, there is such crypto is just a small scale, such a small thing in the grand ecosystem, like, of real estate and all this other stuff, where there's just loopholes upon loopholes upon loopholes. I mean, I don't know. I think it's kind of like unfairly targeting an industry, with what he stated there. I mean, it's such a small part to this huge puzzle. I mean, at the end of the day.
Yeah, it absolutely is.
Actually,
Go ahead.
forgive me, really quick, just to add to that, you're absolutely right, because there is more at play. You apply the same securities laws, wash trading, as he had said, tax loss harvesting, all of that to crypto. It's going to bring down volume, which is going to affect profits for Kraken, Coinbase, American companies, which is then going to take away from tax revenue from the government there. I mean, there's so much that's in play once they apply these things, if they do. So, yeah, I think what you said, Six, is right.
Yeah, I think it's also worth mentioning that this is really just a drop in the bucket. I mean, 18 billion on potential savings. I mean, whenever they use these numbers, they're inflating them. So we know that it's actually going to be less than that. Meanwhile, Joe Biden's budget for 2024 is 6.9 trillion, and a lot of that is not paid for. So it's trying to turn an anthill into something much, much bigger.
Agreed.
Yep.
Okay.
Just political punching points, man. It's crazy.
Yeah.
And you can just tell by the banner, the keywords, the buzzwords they use in it, the flyer you had up there.
Yeah. I mean, especially like when you start talking about like all these corporate tax loopholes and stuff like that, and then they want to focus on crypto. I mean, even in the real estate side of things, there are so many loopholes. You can go out and sell $100 million property, and there are ways that you will pay zero tax on that through like the 1031 process. And there's just like, massive amounts of taxes being evaded across all these other sectors at an insanely grand scale. I just, why he chose to go after crypto, probably because he's going to insult the least amount of people. I don't know. The industry is so small,
Yeah. I mean, the pressure in the United States has been building for quite some time. I mean, recently we saw Bittrex exchange leave the United States, and also like Binance announced they were leaving Canada, but they've also stated that the U.S. is becoming extremely difficult to operate in. They've been under pressure from regulators for quite some time. And many of these companies are actually out there saying to the regulators, we would like guidance, and the SEC has been unable to provide any of that, which is really the biggest thing, and biggest criticisms you could have about the SEC. And several congressmen have also been slamming Gary Gensler, the head of the SEC, for that exact same reason. So it was actually Congressman Tom Emmer. There's a great video, which I'm actually going to post in the show notes, about him hammering Gary Gensler because he was the head of the SEC during the collapse of FTX in particular. That one was what has been framed by a lot of people, including Elizabeth Warren, as being a failure of crypto. But as we know now, FTX, at least in the United States, was fully regulated. It was already being watched over by the SEC. So its failure, its catastrophic failure in this regard, is completely on the hands of the SEC. And actually, Six, you were one of the people who exposed some of that, did the early groundwork. So I'm curious, do you have any comments on that?
Yeah, really, I do. That that whole situation, where I kind of found out about a lot of the shady stuff they were doing, was completely found on accident. But I can say, as far as notifying the Securities and Exchange Commission, I wrote them a letter last June, and they were completely uninterested in what I had to say. I mean, it was just, I was dumbfounded. I couldn't believe it. And then, of course, 5 months later, the whole thing blows up. But it was about a year ago that I was really digging deep into some of the market manipulation tactics that FTX was using, and really, they were violating so many of the 1934 Securities and Exchange Act. They were violating so many sections, just, market manipulation. I mean, just everything. And, it was too bad that, that at that time, the SEC didn't want to listen to what I had to say in an email, and then things had to play out the way they did. But basically FTX was just creating synthetic assets out of thin air, using their exchange to harm other exchanges, manipulate the market. All that stuff is totally illegal, 100%.
Yeah, well, there you have it right there. I mean, they were notified. We have one of the people right here that did notify them of the problems, and nothing was done. JMitch, anything to add to it?
I had high hopes for Gary when I watched a few of his talks at MIT prior to this, but he's just proven to pick the wrong battles, the wrong fights. And then when he, basically is what Six just said, when he has the opportunity, he has the relationship and the open door to be a part of FTX and crypto, and that where he actually has an opportunity to make change, he fails. Not
Right,
much more to
right.
add to that. He's just been disappointing. And
Yeah. I've seen those earlier videos too. Yeah, where he was bullish on crypto for the most part. It sounded like.
Yeah.
And I think he openly stated at one point that Ethereum was not a security. But I could be wrong on that. I'm not sure. Dunki, any thoughts?
I mean, as far as FTX and Sam Bankman-Fried and Gary Gensler, there's no way you're going to convince me that the number of visits we have on log between SBF and Gensler, how many times they met, their history together, their cohorts they have in the background that they all know, that there just wasn't a plan there to be ahead of the game, to invest first and profit first. And then when it all blows up and all of a sudden nobody cares about it anymore, they just want to bury everything and just dogpile on the crypto. The countless meetings, the countless notes, countless acquaintances, things just really don't line up as far as Gensler himself and the whole FTX thing. Sam was leading the entire charge of the industry for regulations. At one point, he had dumped his idea of quote unquote DeFi in the space that he was taking to a meeting with Gensler himself. I don't know if you guys remember that and how everybody dogpiled and hated it. And then all of a sudden he was changing his tone. And I think 2 weeks later, the entire exchange exploded. So They're going to do what they got to do to make sure they get themselves in the clear. That's what the powerful always do. And where it all lands is going to be up to the people and the people who vote. So.
Right. Well, yeah, there was another one, another video out there by Chairman McHenry, who during the hearing he hammered on Gensler about Ether in particular as being, since it's the second largest cryptocurrency, is it a security or a commodity? And it's if you watch the video, and I'll put it in the show notes, it's quite bizarre because Gary refuses to answer this question, and he's actually visibly shaking in the video as he's giving this answer, or I should say, dodging the answer. This to me is really starting to look like a bad situation for Gary. Like, just based on some of the videos of the past, like you had mentioned, JMitch, where he was bullish, and now he's refusing to make really any comment. It's starting to make me think that actually he's under tremendous pressure from the Biden administration. And that he's not actually serving his own agenda. He's just basically doing what he's told. But I'm curious to hear what you guys think about that. JMitch, what do you think?
Well, maybe I shouldn't say this, but maybe a little bit like Kamala Harris, he's starting to fade out into the background and not talk as much. Yeah, I mean that's really.
So you just think he's gonna kind of disappear? Well, fair enough. Dunki, any comment on that?
I mean, I think you said it best. I mean, I don't think he's doing the role of the job. I think he's pulling political favors and leaning to one side of the aisle. So,
right. Six, what do you think?
Yeah, I'm kind of on the same lines there with Dunki, and I'll go a step further and say that I think personally that somewhere along the line, I think Gary is in bed with a lot of these banks, a lot of these financial institutions that want to see crypto suffer. And I think at the same time, he's got his other hand in the pockets of the politician, and he's just really caught in this squeeze of, I think the guy's paid off by like big banks and stuff like that to use his authorities and stuff like that to create policy that's detrimental to the crypto industry, because Wall Street on one hand wants all that crypto liquidity on Wall Street. They don't want it in like the free world markets. That's kind of my thoughts on the whole thing. And I just, I think the guy's paid off.
Yeah. I mean, you talked about the Hinman speech, right? And now there's rumors that the full unredacted Hinman speech is going to be released per orders of the courts there. And now there's already talk instantly of settlement talks between XRP and the SEC. So if this is the case, Gensler ends up losing, it's probably the end of his career.
Agreed.
Right. And so Dunki's, of course, talking about the XRP case that has been going on for quite some time, and they've spent, I believe, over $200 million fighting the SEC. The courts just ruled that they have to release some certain communications that were under lockdown. And so it's kind of expected that this is going to be a game changer in the case. I'm not the biggest fan of XRP, but in this particular case, I'm rooting for them because they're fighting a good fight on this one. So hopefully they'll make some progress with that. And that's definitely something I'm going to be interested in hearing about. But we're going to keep moving here. So the next one is Texas lawmakers vote to include the use of digital currencies in state's Bill of Rights. So this is a pretty interesting one because they actually put through this bill that's going to guarantee, I guess, that the people of Texas can continue to use cryptocurrency without restriction. Well, at least that's what we hope. Of course, the federal government sometimes overrules state governments, but in this particular case, I see this as a very positive sign. I like to see these things happening in an industry. So, what do you guys think? Six, you want to tell us your opinion?
Yeah, I think it's great. Texas has really been crypto friendly for the most part. It's a great place to mine. If you're a miner, they've made it the safe haven now. If these rights get enshrined into the Texas Bill of Rights to own and use cryptocurrency, it just emboldens the movement further. So, I mean, Texas understands that if they can be on the front end of this thing and people move to Texas for the crypto benefits and they start transacting with cryptocurrencies, of course, and they're going to start paying taxes and things like that along the way. It'll generate more revenue for the state. And I mean, I'm very pro Texas when it comes to their stance on the crypto policy. Yeah, I think it's great.
Yeah. Texas has been making some very good moves for themselves. I know a couple people who have moved there in the crypto business that have moved there, and other people who have moved there as well, just from California in general, because they have very favorable tax laws over there. So, I mean, there's been a very, I'm in California, and there's been a very large exodus of people, hundreds of thousands of people who have moved in the last couple of years. And they're spreading out to a lot of different locations, but primarily three places I've noticed, which is Nevada, which we share a border with, Texas, and Florida. But anyway, enough of me talking. JMitch, what do you think? Are you ready to move to Texas?
Well, no, I'm in another good state when it comes to crypto friendly in Tennessee. But I love when states do this. They open up adoption for new technology to their residents there. It's just, yeah, go Texas. I mean, I was happy when Tennessee passed. You can set up LLCs as DAOs here now, and it can actually legal business in the state. So this is great. When, how should I say, the first person that stands up, right, can add a lot of courage to others. So I love seeing Texas fighting the good fight for the crypto industry, and yeah, we should support them.
Yeah, well said. Dunki, what do you think?
So they're like the exact opposite of Sherman, right? So instead of just being ignorant of fact and trying to regulate against ignorance, they're a foster of innovation. They're a hub for this new technology. And I think the two biggest technologies coming are going to be blockchain technology combined with AI. And you're going to have these incubators. So you got now Texas, you got Miami popping off, you got a lot of crypto-friendly laws in Tennessee and Wyoming. And they're going to foster this and fostering it with smart people, fostering the innovation. And is going to bring them tax revenue and population and overall growth in their economy. So I think it's good.
Right, definitely. I agree with that 100%. I would like to see a lot more of that in my home state of California, but thus far, still waiting. So let's continue moving on. So we've seen a lot of major catastrophes occurring in the legacy financial system, specifically with banks. We've had 3 banks fail this far just in 2023. That's Signature Bank, Silicon Valley Bank, and First Republic Bank, which are actually quite giant banks. Now, I believe First Republic is the largest one to fail, and it's the second largest failure in history. The first largest, of course, being back in 2008. But these 3 bank failures are actually bigger than the 25 that top 25 that failed back in 2008. So it's actually a very big deal if these things are failing. And of course, regulators are saying today that the banks are sound. I don't know that I necessarily believe them. JMitch, what do you think? Do you think the banks are safe?
No, I wouldn't say they're safe. Of course, they're going to say that. I think that's one of the biggest concerns for the Fed right now is bank deposits. We've been seeing them going down in 22, taking a big hit. And yeah, it makes complete sense that these 3, as you had mentioned, the magnitude larger compared to 2008. I learned an interesting fact yesterday, and I didn't really know this. Prior to the pandemic, SVB's total deposits were around 50 billion. And by the time of their demise, they were at 200. I mean, to think about, that's how much money flooded into the system. So truthfully, I'm surprised with all the pressure that's on the banks currently that it even took as long as it did for this to happen. Higher interest rates, depositors leaving, putting their money into money market funds, treasuries. So they're losing depositors there. On top of that, you have fear. So they need to attract more depositors. They're increasing savings accounts rates. Lots of these banks now are offering 4% plus just in savings accounts because they need their depositors back. Are they safe? No. Jerome Powell, though, has showed us that when he wants to, he doesn't have any problem with pivoting in an extraordinary manner. So is it over? No, but I think he will act to mitigate, if that makes any sense, once we start to see more cracks form.
Right. So you're thinking faster action will be taken to avoid failures, but more failures are pretty much inevitable. Did I get that right?
Yeah. Money supply is going to increase. Even if they keep
Yeah.
rates high, the money supply is going to increase. They're going to continue to add onto their balance sheet. So, yeah.
Yeah. Dunki, what do you think?
Well, I mean, for the first time ever, we're challenging, the notion of, full faith and backed by the United States government or the FDIC insurance stuff. We've heard people talk about on Capitol Hill that they're only going to, insure everybody regardless of the $200,000 cap at this bank, but not at this bank. So they're picking and choosing winners again in the banking sector, and who gets their money back. At some point, people are going to lose the trust if they haven't already. And that's going to foster and further push the innovation in the crypto sector. I think at the end of the day here, they're now scared of what's going to happen. Like where do you take your fiat? Do you just take it and now switch it into euro? Do you switch it into yen, or do you switch it into Bitcoin, or do you switch it into a stable coin? So now they have more challenges to the U.S. dollar than they ever have had in history, right? So they got to start making some decisions. Like you said, I've seen interest rates up to 9% just for bringing your money back to the bank. But at this point, I will save my money, put it somewhere else, risking that 9% reward just to make sure I don't lose it all. And if we're looking at the sheer number of banks after the last collapse back in the 80s, was 84, 86, they're just getting smaller and smaller, and the overall banks are getting bigger and bigger. So it's a crazy situation, and I don't know where Powell can take us on this. I mean, if you're following historical data on what we would need to do to bring interest rates back down to 2%, you need to hike to like 17% right now, and we're sitting at 5.25. So there's a lot of legwork to do. Is the soft landing in the cards for all this? I don't personally think so, but I would love to be surprised.
Well said. Six, what do you think?
Yeah, I share kind of the same sentiment as Donkey. As far as like the soft landing and stuff goes, I think we're in for it, folks. And I think this is going to be just the start of more catastrophic events to kind of take place. Even, when we look back at like the 2008 banking crisis, when we saw Washington Mutual go under, that was in like September of 2008. The trickle down effects of that were felt I'm talking about the real hardcore trickle down effects, 2 to 3 years, after that 2008 mark is when things really hit the fan. And so I do think that right now, when we saw the First Republic Bank close, Silicon Valley Bank, and Signature kind of collapse, I know the government stepped in and kind of helped them out. JP Morgan and stuff is going to start taking over some of those banks. But, I still think that a lot more dominoes are going to fall. And how much money are they actually able to spend putting out all these different fires in all these different banks when the bridge breaks? And I think that, this is just kind of like one of those slow motion car crashes. And we kind of saw it this last bear market in the crypto industry, where we saw one point of failure, and then, Three Arrows Capital collapse, and then Voyager collapse, and then all these other things collapse. And I think that it's going to take time before we really dig in and see how bad this is going to get. But when we look at Washington Mutual, they were a $307 billion bank, and we look at 3 huge banks that just collapsed with a total combined value of like, what was it, $600 billion. Man, like I have no confidence in the bank. And really, I've been kind of preaching to my own like family and friends personally, saying, hey, if you've got more than that 250,000 in that FDIC insurance, in an FDIC insured account, like you need to start creating more accounts. And I stopped into a bank a couple of weeks ago to spread some money around, and I started asking some questions about the FDIC insurance. And what really raised my eyebrows was the fact that they were trying to get me to invest some money in some of these bank investments and stuff like that. And here I am, I'm just trying to park cash. And, I think the banks are really on edge right now. I'm probably rambling on at this point, but my confidence in the situation is low.
Sorry. Oh, I didn't mean to interrupt.
Oh, you're good.
It's really funny. My local bank called me a couple weeks ago. And they're like, "Oh, we're just checking in on you. Want to make sure, do you need anything?" No, and you never call me. So what is that? What is that telling me if you're calling me? So.
That's suspicious.
Yeah, I know, right?
Yeah.
I mean, like my experience with banks has not been very positive over the last couple of years. There's been a lot of things that have happened. Every time I go, let me say this. Every time I go into a bank branch for help, there's a line, and then you finally get up there after waiting like about a half an hour, and the person's trying to push another credit card on you. Like they don't care. Like there was one time that like this guy was literally like sleeping on his desk, and he just like sees me walking, and he's just like he doesn't even care, right? That's I mean that's the attitude that I've seen in the banks in my region, at least. And then so they try to shove this credit card on you, and when you don't want it, they're very disinterested in everything you have to say. But if you happen to mention anything about, yeah, I'm thinking about opening a new account and moving over money, all of a sudden they're all excited again, right? It's 100% just about their little commissions. And like, I can't believe that we have so many of these branches open to do this kind of stuff. When you think about the thousands and thousands of branches, just basically sitting with people just sitting in there that are largely disinterested, this is a legacy system with an enormous amount of baggage attached to it. I mean, and this is just a small.
Bitcoin uses too much energy, right?
Oh yeah. We already know. We've already pushed through the numbers. We already know the banking sector takes up an enormous amount of electricity, just because they're keeping their doors open and their lights on. But it all adds up. It adds up. There's a huge amount of people that are commuting to work every day to sit at their desk there and do basically nothing. But anyway, let's continue moving on. This next one here is the Fed reveals that 722 banks reported unrealized losses of over 50% of capital as concerns grow over the U.S. banking crisis. So, I mean, this is basically just reiterating what you touched on, Six, which is that these banks are probably struggling here, and there's a lot of stuff that is not actually being said. Anything else to add to that, Six?
Yeah, I think that this statement put out by the Fed is really kind of a wolf in sheep's clothing statement, because when you start talking about the Fed reveals 722 banks reported unrealized losses over 40%, this is bad. I mean, 722 banks, but I want to know the numbers from like 40% to 50%. Why did they just go to that 50% number? I tried to find some extra data on this. I was unable to find it. I wanted to see what how many banks were in that 40% range, how many were in that 30% range. And when you start looking at like this 50% number, over 50%, it's only 722. I think they're sugarcoating this report, and I think that they are trying to play things off, because I think things are worse than they want to admit.
Right. Yeah, I share that sentiment for sure. Just for reference, there are actually 4,100, a little bit over that, banks in the United States. And this is 722 of them. Of course, we're not talking about branches. There's many, many more branches than that. We're talking about actual banks as in companies. JMitch, do you have anything to add to that?
No, not really. I probably would answer the same way when I was just talking about why these banks are being suffocated so much and the reasons behind it. It doesn't surprise me. I mean, that's exactly what took SVB under. They got all those deposits, threw them in mortgage-backed securities, interest rates adjust, bank run happened, and it was illiquid, and they couldn't access it in time. Yeah, not
Right,
not
right.
more, not much more to add here.
Yeah, see, yeah. Well, definitely. I mean, that is the case, and it's just showing. I mean, really, what the headline is showing is that there's a lot of stuff going on here, and these banks are at, this is 50%, right? This is 50% of their capital. If they get to 100% of their capital, they're illiquid, and the banks go away. And when you look at the economy and everything, in my opinion, it hasn't really tipped yet. I mean, that's one of the entire things about the Biden administration not wanting to declare this as a recession currently is because it really hasn't fallen off. I'm worried that once one of the markets actually tips, these 722 banks are going to be a lot higher than 50% there. It could be dangerous. But what do you think about this, Dunki?
So the whole thing of their 50% of their capital is gone. The whole idea of fractional reserve banking, meaning they don't have to have your deposits on hand. Their capitals are deposits, right? So there's this old saying that money shouldn't rain on fools. And Powell and the Fed and the trade fi markets in general tend to gate people out of larger investments with the whole Accredited Investor Act, right? So who's regulating these guys making the poor investments and losing our money and affecting the entire economy? It's just over and over again, retail is blamed or protected from making mistakes and losing their money, but they don't seem to have anybody smarter running the actual banking system. So all in all, it's going to get worse before it gets better, in my opinion.
Mhm. Yeah, one of the things you touched on there was the unrealized losses. It's not just capital though; it's actually assets. As in, we know that some banks are actually holding on to real estate, for example. And the way that it used to work prior to 2008 was there was a law called mark to market, where the asset that you had on your books had to reflect real market value. So if the value went up, you had more money on your books, you could lend out more money as a bank. And if it went down in value, the reverse would happen. You'd be able to lend out less money because you were losing on your investment. I believe in 2008, 2009, somewhere in there, they suspended that rule so that they didn't have to actually recalculate how much their assets were worth. They could continue to use a value from the past, even if it had gone down. And so this was used to prop up the banks back then. I don't know that this law has ever been brought back. I looked it up recently, and it appeared that it wasn't. I'm not 100% sure on that, but I mean that would explain a lot of the things that we actually see out there. In which case, like they're pretty much just using fictional numbers on their books at this point to make more investments and pull in more money when things are actually good. So these types of things. I mean, I'm largely against these types of policies because. And actually, I'm also against FDIC insurance, by the way, just because it encourages such bad behavior.
Well, I mean, if that that law is true, I mean, what they're doing with that is they're changing up. They're trying to hide the red ledger, that they're in the red on the investment. And if they're doing that with your money and your investments to hide and save a bank from going under, they're doing it wrong. And those are the types of changes we need to see in the entire environment. Right. So the legacy banking system needs a complete reset.
Yeah. I mean, it encourages terrible behavior, which is really one of the biggest problems. Like I'm sure like anybody who has less than 250,000 doesn't care what bank their money's in, pretty much, because they believe it's going to be insured. I mean, like that's part of the reason why you're getting phone calls, JMitch. Do you think, like, actually just let me elaborate on that. What do you think? Why do you think that they were calling you in particular to try to make sure that you were happy? Like, why do they think that you were going to run?
My guess is if I gave them the time of day and allowed them to continue, they would ask me. I've gone in there before for trying to get an account for an LLC for a couple of years ago. And they probably were going to ask me about any future business ventures. And if I needed an account, they were probably going to try to ask me to open up a line of credit. And probably because the banks need it right now. They're starving for depositors. So
they see your cash flush and they want you to spend your money.
Say again?
They see that you have cash and they want you to spend your money.
Yeah, probably.
That's how they survive, right?
Exactly. Yeah. I mean, I think it's as simple as that.
Right.
They want the
Okay.
money. Yeah.
They want us to borrow money from ourselves and basically pay interest on it. It's the best system in the world.
Yep. I mean, in the EU right now, they're doing exactly that. They're talking about enacting a rule that people with a certain threshold above their savings have to spend it to
Wow.
induce, economy recovery. It's insane line thinking.
Wow.
Yeah. Some of that stuff that's
Agreed.
coming out is wild. We'll move into that in a moment. But here, very quickly, let's go through these articles because we're already running out of time here. Senators slam bank execs for blaming collapses on crypto, pocketing millions. So this was an interesting one because Signature Bank's Scott Shea tried to blame everything on crypto, but they didn't actually buy it. Like they came back, the senators, and basically said, "No, this was all you're doing. You screwed this up and caused the failure." So I see that as a positive, but I want to get your guys' comments. Dunki, what do you think on that?
Again, they're trying to nail political talking points. I mean, it's verifiably not the crypto depositors' fault, right? So anything they're saying past that, they're just trying to score more political points.
All right. I'm curious though. Do you believe that the senators' remarks are genuine at all, or do you believe those purely political as well?
It can be a combination of political in ignorance. It could be that they've never done the research and they're just taking a tear sheet from somebody else and just trying to hammer it home. And there could be a number of reasons, but all in all, everybody in Congress or in the Senate, in any position of power to make decisions on this, they need to educate themselves a little bit better. And when you can be called out as she was by Cynthia Loomis on this, actually for a pretty fiery, I don't know if you have the clip, but it was a pretty fiery back and forth with that during those live hearings.
Mm-hmm. Yeah. I'll link that in the show notes. JMitch, any comment?
My 2.5-year-old daughter could take better responsibility than him. I mean, it was just pathetic. I mean, that honestly, there's a lot of talk in the article about the massive bonuses that the executives got and how that frustrated everyone. I mean, that's not an old story. I mean, that's been around for forever. And honestly, we all know that. So if we don't like it, we don't have to put our money in there. I didn't really get bugged about it, but to your point, yes, I'm happy that they fired back. Whatever their motive was, that's good. Better that than not. But it just frustrated me. Never thought when I became an adult, I'd find so many other adults that didn't know how to take responsibility. So that to me is the most irritating part.
Right.
It's
Six,
always
what did you
past the
think?
buck. That's crazy.
Yep.
Mhm.
Yeah, this is just another CEO that's just scapegoating the crypto industry, probably because, it was the popular narrative at the time. I mean, the fact that he pocketed a bunch of money before the thing collapsed and there was all sorts of other issues with him selling off shares and stuff like that when they knew the state of the bank was in peril. It reminds me of like the classic crypto pump and dump scam. Like you sell out all the shares to your project, which is the bank, and let the whole thing collapse on all the investors. I mean, I don't know. That's about all I got to say on it. It's kind of going back to Sherman. Just, hey, let's scapegoat this defenseless industry because let's face it, really Tom Emmer and there's like a few other people are the voice of crypto at a political level. There's not a whole lot of people. It's probably one of the weaker industries to attack and blame because we certainly can't take up arms on Twitter and effectively, well, I mean, we can blast the politicians and stuff through Twitter, but I mean, you almost have to be in a position of power to really make those changes at a high level.
Right. Yeah, I mean, like the banks having this problem again. This is a situation that I see that is created by the banking system, where there is an incentive for them during the good times to make these kind of gambles, and so when they work, these guys make millions and millions of dollars in their bonuses on top of their salaries. When things go bad, all of a sudden they're bailed out by the government. And I do see FDIC as being a bailout. I mean, like, unfortunately for the people who had money in that bank, their money should be gone, right? It should be gone because they put money into a risky bank. And they don't care, of course, because of the FDIC insurance. That's just the way the system works. I mean, in the past, maybe we didn't have such a better system, but with cryptocurrency today, we actually have something to completely replace these systems. Now, with all the new systems that are coming out for, like, for example, social recovery and custodial, it's like partial custodial storage, where basically like, you have three different banks or something, each holds a piece of your public key, so they can't get into it, but you can recover your keys if necessary. These types of technologies that are coming out are really making it much more accessible for the everyday person. So it's some point in the time, hopefully the future, like, I see this as being direct competition to the banks. So I mean, anyways, it's no actual surprise that they're just trying to push blame onto crypto whenever they can. That's just what these guys do. But let's keep moving because we're almost out of time. The federal funds rate is currently at 5 to 5.25%. The next FOMC meeting date is June 13 and 14. From what I'm seeing, no hike is expected, but this is kind of a controversial issue. Like, what do you think, JMitch? Do you think that we're going to see another hike, or do you think it's over?
If I was a betting man, I would say they're stopping right now. If I look at, what was the CPI print? It was
the CPI.
I think the sum of the total CPI year over year, 4.9, 6-month annualized 3.3, PCE core, which we know the Fed looks at the most, 4.6, 6-month annualized 4.2. If I got that right. I mean, the sum of that's technically below 5. Just based off of that, I would say I can't speak for meeting after that or following, but if I was a betting man, I'd say they're going to stay put in June.
Yeah, I think they're worried about tanking the economy at this point. They're waiting to see some results. I mean, if we look at some of the CPI stuff, I have it right up here on all items. It actually has come down from 9.1% peaked, and it's come down to about 4.95% or so. So, I mean, there has definitely been some slowing in it, but there's a lot of factors involved with various things. There's, of course, always the black swan events that occur. We have this war going on with Ukraine. There's a lot of readjustment in energy, and energy costs are one of the things that have come down. But anyway, I know that you had some comments about that stuff later, and you might feel different. So, Dunki, why don't you give us your thoughts on that?
Well, it's really going to depend. I mean, when Powell says they got to take it one day, one meeting at a time, they really do. I mean, what they're doing is they're turning up the heat on the economy for pressure to push things down. And you got to see if you can stand the heat. If you can't stand the heat, they got to pivot or they got to print. So we're getting to a point where they may not raise rates for the next couple meetings, but they're certainly not going to start dropping rates. They got to get the job done. They got to see it through. And unfortunately, the guy in the chair is the only guy we got to do it. So if we can stand the heat and things don't collapse, they're probably going to end up just staying put, see where the inflation numbers can come down to. And if things start going the other way, they're going to have to increase again. Like I was saying earlier, there's a historical number you got to hit to bring these things down. And that number technically is around 17%. And we're nowhere near that, right? And the other thing they're doing is they're playing funny numbers again. So they're changing the criteria. They're changing the back testing data from 2 years to 6 months or 2 years to, the 1 year on certain things they're looking at. So the funny numbers got to add up too. That stuff's all got to work at the end of the day. I mean, if it doesn't, rates are going to go up. People are going to suffer. Businesses are going to collapse, and the dollar is going to spiral out of control to the downside.
Right. Well said. Yeah. I mean, right now we're looking at 4.9% on the CPI, which is a heavily manipulated number, but it is 4.9. They're trying to get that down to 2%, I believe. And so that doesn't seem like it's that far, but that might be quite a bit of a push still. I'm watching that closely. I'm curious, Don, if that actually will be enough to push it down further. The one thing that I see as an outlier to this is, let me see if I get at the M1 data. So, I mean, inflation is largely created by money printing. And if you see here, we have this massive push up in the money supply. This is the M1, and then it dropped off. They have extracted some, but there's a big difference here. It's got to go way down. So I don't know that the interest rates at 5%, or excuse me, wherever they are right now, that pushed it down to the CPI to 5% is necessarily enough to reverse this type of a thing. And actually, I don't know that it's actually possible, because when you look at the numbers, again, going back to the CPI, they're saying they're trying to get this 5% down to 2%. They're talking about this year. They're not talking about the last 2 years. The inflation since 2020 is actually around 18% right now using their numbers. So it's fully entrenched at this point, and they're not even trying to reverse the previous stuff. Six, what do you think about it?
Yeah, I think Dunki explained things at a super high level, and I agree with everything he said. But when it comes down to trying to hit this 2% level, we got to shed off 3%. I think when it comes down to it, we just can't dip down and hit that number. We need to have that 2% number become like the new average. And I think it could be years. I don't, I agree with, for now, at least at this time of day, I think they're going to keep the rates kind of staked where they're at. But man, we start seeing these numbers kind of pull a 180. Things could get bad. But man, I don't see anything happening within the next year, at least maintaining that healthy 2% average.
So they got to start doing some quantitative easing and offloading their balance sheets. And for them to offload balance sheets, somebody's got to have money to buy it. So I don't see that happening at a very fast pace. So
agree.
What they could
100%.
end up doing is, to prevent one bubble from cracking, we create another bubble. And we've been doing that same thing since the 70s. So every time the economy is going to pop, we print a bunch of money, we save the economy. But what that does is just, it moves the bubble higher and higher and higher. And at some point, it's going to crash. It may not be now. It may be 5 years from now. If the Fed turns around and starts printing more money, you're going to see that money supply go up, and then it just dilutes the dollar even further. So they're stuck between a rock and a hard place.
Right. Yeah. I mean, like, I generally see that exact same way. Though the difficult thing here, though, is that you have really two options. You have money printing, or you have tightening. And if you tighten, it strengthens the dollar and everything, but it's going to crash the economy really, really hard. I believe that they said I forget what it was. It's like the New York federal office or something. They released a statement a while back saying that they thought that the odds of a soft landing was around 1%. I think that might be a little bit high, actually. The odds of this happening I think it's remarkable that it's gone this far. And part of this is, like, you'll watch CNBC and everything, and they're calling not Gary Gensler, excuse me, Chairman Powell of the Federal Reserve. They're calling him a complete idiot on there, like, openly on the show. I actually think that he's doing a remarkable job. Whether or not he's doing an ethical job is a completely different question. But in the way that he is handling this market and actually keeping it afloat while raising rates has been pretty remarkable to me. And one of the biggest, did we just lose Dunki?
No, I think we lost 6.
Oh, we lost 6. We lost 6. Excuse me. He's back.
There
Okay.
it is.
No, sorry guys, I don't know what happened. Everything just
problem.
digitized on my end.
Yeah. So one of the biggest things that he's been successful at, Jerome Powell has been successful at, is not tanking the stock market. And the reason why he's doing this is, I think he's actually faking out the market. He's going out there and saying these hawkish statements while doing certain type of things that is giving like this little, like, it's almost like a kind of like a wink, maybe I'm going to pivot. Maybe I'm going to pivot. And every time that he makes this statement, the stock market rallies on this because they think he's going to pivot. Because if he pivots, then all of a sudden that means more money being injected into the system. And so when he makes these statements, even though he doesn't actually do it, the stock market stays up. And as long as the market stays up, he doesn't actually have to pivot. It's actually a pretty brilliant strategy if that's what he's doing.
Yeah, he's using the market as a leading indicator.
Mm-hmm.
I want to throw out a little devil's advocate point of view and maybe bring some possible hope. I think if it was only interest rates at 5% that we had as a possible deflationary pressure trying to combat this inflation, I will be a lot more worried. Part of the reason when we opened up, why I said I believe we're coming out of an investor recession and we're in the beginning stages of maybe a Nike swoosh recovery when you're looking at NASDAQ, S&P. The whole story with AI and that genie being out of the bottle now is technology is in its own way deflationary, right? And we're seeing the NASDAQ outperforming the S&P right now, which is a good sign that there is investors are excited about investing in tech right now. That's a good sign. Some FOMO is kicking in. That is a deflationary aspect that we can add into this that can help against the fight. Also demographics. Boomers are getting older. They're spending less. Millennials are entering we're starting to enter our higher spending years, but we're not all there yet. There are a few things at play that can help with combating this inflation, basically.
Yeah. And does it concern you that credit card debt is at its highest level of all in history?
Oh, absolutely.
Credit card and household debt right now. I mean, that's part of the thing that worries me right now is that these debt levels are so high. Even though investment is still strong, like these levels are so high, you have to look at multiple sectors. Is my opinion, and really the general people, the population is going to be the largest segment. And watching these numbers go in the wrong direction is quite worrying.
I would agree, absolutely. Makes me feel like, as we said, even if they just keep rates stable and they increase the money supply, bring out more stimulus checks, introduce a UBI of some sort, because I have a lot of worry in what you just said, just because, unfortunately, I don't see Americans as a whole all of a sudden deciding to be more mature and handle their finances better. So I'm bearish on that in the future. So, so that is a sketchy thing.
Yeah, I mean the one thing that I can say though is that I'm not 100%, even though I've stated a lot of things about Jerome Powell and saying that I don't really think that he has to pivot. And my personal opinion is that he's not going to, and that he's actually going to stick to that 2% mandate, which means we could see higher interest rates. Maybe not. Maybe we'll just hold here for a while. But I see that as the case for tanking of the economy. But I got to say, it is not a super strong opinion on that. Like, I could also see pressure from administration coming in and saying you have to pivot and start printing money again. In which case, there would be a complete reversal in what's going on. And that would be the start of another bull market. So I would say I am largely on the fence, but if I have to choose a side, I'm pessimistic at this point. Either of you guys, anybody else add to that?
Well, I mean, for investments to keep flowing, people have to have capital to invest, right? So if there's one thing we can take Powell at his word is he's going to attempt at his very best until he no longer has a job that he's going to try to get the 2%. That's the one thing he's never faulted on. So if we get a PCI reading or an inflation reading that just comes in bad for an FOMC meeting, you can expect him to raise rates, right? So if between now and the June meeting, things just really hit the fan and prices start climbing again, like gasoline and utilities over the summer months out here in the States, he's gonna barrel down the rate more, or up more, excuse me. So instead of 5 to 5.25, I mean, maybe we see another 0.25% bip. He'll attempt to get the job done.
Yeah, absolutely possible. Let's see. We did have looks like a couple questions that I will quickly throw here. Crypto is borderless. How do you properly regulate something like that? Well, that's the thing, is like I don't believe that we really should be truly decentralized. Things should be under regulation, because for largely that reason, they are different beasts and they are completely transparent in what they do. So regulation seems kind of, at least in its current form, as not appropriate, in my opinion. But at the same time, when there are things like fiat on-ramps, when you have things like stable coins, which are dealing directly with something that is United States controlled, those types of things definitely, in my opinion, should have some type of regulation around them, because you're dealing with something that's already regulated, more or less. But anyway, any of the three of you, do you have any opinions on that?
Well, I mean, at the end of the day, being a universal language of crypto adoption on a worldwide scale, I mean, like I was saying earlier, you got to start having these options. So right now, the U.S. is just afraid that crypto in general is going to affect their USD, their fiat, right? It's going to affect their liquidity. It's going to affect where the money gets sucked out of the economy, and where it all goes. So having like a United States USDC, and then having one based on the euro, and then having one based on the yen. There's these potentials for other stablecoins to crop up that are essentially regulated by the bodies that they operate in, while cryptocurrencies in general, their intrinsic value comes from the coins themselves. So you have one Bitcoin, you're always going to have one Bitcoin, regardless of what the fiat value is designated to, be a euro or United States dollar or yen or whatever you got going on. So there's got to be some growth in the stablecoin industry, in my opinion.
Right. Well said. Okay, and then let's move on to the next one here. This is a question for Six Figs. Is it possible to hack other gold shell boxes and mine CKB? They all look the same.
I wish you could. I think it's all comes down to the little processing chip that's inside of them. So I think you'd need to buy a new motherboard.
Yeah, you'd have to basically replace the internals. I don't think that there's any way to convert them. That was done on purpose, by the way. That's the reason why they came up with the Eagle Thong algorithm, is specifically so that you could not use other hardware. And the reason for doing that was because they didn't want it to be attacked by some giant farm when it was in its very new, when it was just released, when it's kind of in its infancy days. So yeah, I think the answer to that is definitely a hard no. So we're pretty low on time. I want to just go ahead and wrap up though. So for any of you, like, do you think if you had to fall on one side or the other, are we headed into a deeper recession, or do you think we're about to enter a bull market? And this is or any other predictions for the future. This is based on our discussions here today. JMitch, I want to hear yours first because I'm quite interested in if we've changed your mind at all. What do you think?
I'm still more on. You had mentioned black swan events earlier. If I have any fear, it's something like that, a greater fear. I think it's just smart for everybody to keep their day jobs, make sure you have consistent income coming in, and go out there and deploy some capital. Other than black swan, like something nuclear with Russia, or the infamous cyber attack on the banking system the World Economic Forum always talks about. Unless something like that happens, yes, I'm on more of the optimistic side. I'm trying to just follow the money right now. Yes, we've seen several hundred, upwards, like after the bank, like maybe 600 billion in M2 has left the US. China, since fall of last year's, M2 has risen by $5 trillion. It's insane. That's where all the money is. I think that there's going to be good plays in China and emerging markets in Asia. I think that that's going to dominate 2023. Maybe even a little bit early into 2024. There's good spots. Michael Burry announced that he's putting a bigger stake into Alibaba. So I know I'm not the only one looking at that. I think there's I can't speak. News travels so quickly. I'll wrap this up these days. So there's so much fear that can hit at any moment. We get articles that come out. We didn't have that back in 2008. I can't speak for interim over the next couple months of some quick drops that we might have due to some fear, but I'm leaning on the camp of a Nike swoosh recovery. Like I said, NASDAQ's outperforming the S&P. That is a good sign for positive sentiment in the markets. AI, I believe that genie's out of the bottle. And we can see that investors are excited about it and they want to deploy capital in that area. And that's good for blockchain. Asia dominating 2023 is good for blockchain. I heard that I think it's out of all the crypto users in the globe, you can fact check me on this because I could be wrong, 70% or so reside in Asia. And you have M2 growing over there, that some of that money will come in, and AI needs blockchain because as we see with ChatGPT, you can get tons of fake stuff online. You don't know what's real anymore. So being able to verify and have immutability, AI and blockchain, they're a perfect marriage for each other. I I think there's a lot of opportunities that exist at this very moment. And I probably am sitting on 20%, 15% cash. I'm like 85% in already. But it's going to be more consolidated. So you got to pick your bets.
Well said. Dunki, anything to add about recession? Are we entering recession, or are we about to add in another bull market?
I don't think we're anywhere near a bull market. I think TradeFi's in trouble. I mean, we have the housing market crisis that's going to start creeping up here in October based on all the foreclosures that are not quite yet happening. Crypto in general is really going to depend on if they see it as risk on or risk off if the stock market tanks. The U.S. has to pivot, and they have to verifiably pivot either by printing money or get to 2%.
Right. Well said. Six, how about you?
Yeah, I'm kind of like stuck in the middle between all this stuff. My heart says, I want to see at least a little mini bull market hit the crypto space, just because the last year and a half, 2 years, or since November of 21, it's been so bad. But like JMitch was saying, it's just, I am hopeful that we will, maybe emerge a little bit from all this bear market, and get kind of people excited to start investing again. I do think that one little mistake, like a nuke going off, I should say, that's not little, that's huge. One mistake like that would tank everything. I think the markets in general are they're on eggshells. The housing market, it's pretty bad. A lot of people have just purchased a lot of homes way overvalued. It's really no different than what happened in 2008. I don't know. I think the timing of that whole industry, of the housing industry, is going to take time to collapse, though. Maybe a next year or two. I just don't know. I'm so undecided right now.
Yeah, I see what you're coming from. I mean, like with all three of what you said, like I see these scenarios all playing out. I largely see what Dunki sees as in I think it's going to go down very quickly and suddenly, unfortunately. But at some point they are going to spin around, and then it's going to rocket back up. It's going to do that Nike swoosh. It's kind of just when, and I'm really on the fence, with that as well.
Yeah,
But
I mean,
anyway,
I think there'll be that V-shaped recovery, so just not right this
Yeah.
second.
Yeah. So yeah, I mean, like where my money is and everything is I am betting on it getting worse before it gets better, but I'm seeing it as getting better very quickly once they do pivot. But anyway, we'll see what actually happens. But we are out of time for today, guys. We got to wrap it up. So anyway, Six, could you give us any final thoughts you have, and then give us your socials?
Yeah, no, I think this was probably one of the best discussions I've been in for a long time. We covered a lot of ground on what's going on. Um, I just want to say thank you to all of you guys for sharing the stage with me, and to everyone watching. Thanks for being here. Really, when it comes down to it, you can find me on YouTube at 6figs, or on Twitter at Real 6fig, and then yeah, shoot me a message. I do like lots of videos on trading and crypto news, stuff like that.
All right, great. Dunki, you're up next. What are your final thoughts, and what socials can we find you on?
Gotcha. So, I mean, irregardless of the how pessimistic or optimistic you can be on these things, this is all taken one level at a time. So, I'm a trader by trade. I just go by what the charts tell me, and those are the things I'm kind of seeing on the higher time frames, right? But with that said, it's one level at a time. I mean, we could bounce from here and go anywhere, right? As far as socials, you can check us out on Twitter over here at DeFi Reb, and then our YouTube account is at DeFi Rebels, and you can certainly get a lot more information in the About section over there on either Twitter or YouTube. But I do appreciate everyone sharing the stage here. It was a great conversation. It was good to see you, Six. It's good to meet you there at the top as well. And I appreciate everybody here.
All right, JMitch, give us your final thoughts, and what socials can we find you on?
Thanks. Well, I just want to say thanks, Jordan, and to the foundation for having me. This is a great opportunity, and I appreciate it. Dunki, Six Fig, great seeing you guys. Final thoughts. Keep your day job and then go out there and take your shots. And don't be, and know you'll probably mess up and fail. Lord knows I've done it a ton of times, but it's the cost of education in this space. There's a lot of fear right now, which means that, yes, it's risky, but do your due diligence and get out there and take your shots and enjoy it. Yeah.
Yeah, as the saying goes, I believe by Warren Buffett, be greedy when others are fearful and fearful when others are greedy. Something like that. This is a time of it's a mixed time, actually. It's a mixed time. It's a very mixed up time, isn't it? I mean, there's a lot of fear, but at the same time, there's no panic yet. So it's hard to say, but I'm personally waiting for the panic. So I think that there's more to come. But in the meantime, I am just living life day at a time the best I can, and not trying to worry too much about this stuff, of course, because ultimately the sun's going to come out the next day, and there's another fight ahead of us. There always will be. So continue to go out there and educate as much as you can. Anybody who wants to learn about crypto, of course, that's who we are as investors. We're all inherently evangelists. That's what a decentralized system is. So it's on our backs to educate others and help people to understand why it's to their benefit. Why should they not listen to the Elizabeth Warrens of the world, and why they're going to ultimately be in a better position in the future once we do see mass adoption. So with that said, I think that we're at the end here. I want to thank the three of you for joining me today. This was a great conversation to have you on. And I want to thank everybody at home as well, just for listening in. We will be back again next month, and check the show notes later on today. I'll have everybody's links in there, also with the videos that we talked about. Okay, thank you, everybody.
Thanks, guys.
Have a great day, everyone.